Good morning, everybody. Happy Monday. It's August 17th, 2026. Great to be with you today. It's about 8:35 in the morning Eastern time. My name is Bob Lang, and it's time for our Daily Bites. We're come to you every Monday and Thursday morning, talking about the markets, talking about the economy, volatility, the Fed, anything that might have happened over the weekend that can give us a little bit of an edge into our trading for the coming days. Of course, this week, being the third week of August, Friday will be options expiration day. We call this a double witching day. Their options expire, equity options, of course, expire on Friday. We'll also have index options expiring as well, too. This is not quite the big whammy of volume that we normally see on a triple witching. That will be coming up in September, but still there's probably a significant amount of options that are going to be expiring this Friday. So pay attention to that. And if you're inclined, if you have some short-term options, you might want to consider rolling those to some later strikes as well, too. So today actually was an interesting day. It was a milestone day. We're seeing some options trading this morning that started at 7:15. That's right, 2 hours and 15 minutes before the market actually opens. We're seeing some options trading. There's about 20 options there. The CBOE has opened up options trading in the pre-market. They're calling it GTH, or global time hours. There's also going to be some trading in these same options. We're talking about some of the Mag 7 names, along with Micron, Broadcom, and a few other names as well, too. There's going to be actually trading in after hours between 4 and 4:15 on these names. Currently, before this rule was put in place, you could only trade the SPY and the QQQ, so IWM, and a few other ETFs as well, too. So they're expanding the trading. And why are they doing this? Because there's a demand for it. There's people out there who are going to be trading these options. And as long as there's market, CME, CBOE, NASDAQ will always be there to offer new products and different products and offerings and so forth, and expanding hours. So it is what it is. And I remember hearing stories. I wasn't around back in the day, but they actually did have markets open and trading on for like a half a day on Saturdays. And I'm glad they got rid of that many years ago. But interesting how they, have basically followed the lead of taking hours to where people aren't really used to it, and trying something new. So, obviously with the 0 DTE options that we have every single day, they've become quite popular. So they're thinking that this is going to be popular as well, too, trading. So I would caution you trading in the pre-market or trading even after hours to let the markets figure out the style and the spreads that you're going to be encountering when you're trading these vehicles, right? So I think a lot of these names that are going to be trading are not going to be available to trade in the after hours, especially after earnings, until after 4:15, which means that earnings are probably going to be coming out on these names after the market's closed. So you can, obviously, this is set up for a much more riskier situation than we had prior. For 15 minutes, but we'll see what happens. So let's take a look at the markets over here. So futures have pulled back a little bit this morning. We're down about 50 bips on the S&P 500 ES futures. The NASDAQ was up about 150 a couple hours ago. It's only up 63. NASDAQ has been knocking on the door of new all-time highs. It may get there sometime this week. We'll see what happens. Dow Industrial's down about 187 points right now. Russell 2000 looks like it's going to be opening up slightly lower today. We're seeing yields down a little bit this morning. I saw the Fed Fund futures this morning are showing about a 30% chance now of a hike in September. If you have to go all the way out to December, which is 3 more meetings to see where the next hike has tilted. And according to the Fed Funds futures, they're only seeing 1 potential rate hike in 2026, and that would be likely in December. There is a slight tilt towards a hike in October's meeting, but more likely December, if that. And So obviously, the Fed funds futures market and the Fed is paying attention to the data, right? They're not saying it, but they are paying attention to the data. So the data last week was pretty good, with the basically inline PPI and slightly in line to slightly better CPI numbers last Wednesday and Thursday. So listen, the data is telling you that inflation is not going up that much, but it could be coming down slightly, very, very slowly. And the Fed funds futures market is telling you that they probably don't need to raise rates so soon. And as we come up to the election, which is coming up in November, it's been policy, unwritten policy, that the Fed tries to stay away from being political, and they generally speaking, will probably pass on a policy move in the October meeting. But we'll see what happens. Obviously, if the data is telling them to make a move to the downside or the upside, then they're probably going to do it. So, so what do we got going on this week? Well, obviously over the weekend there was some news about the administration, Trump administration, saying that telling Apple, don't go to the Chinese to buy chips, right? So that is obviously going to be a nice boost and a lift to some of the American companies here, like Intel. It's up a little bit this morning. We're seeing NVIDIA up a little bit. It's also a good boost to the memory names, SanDisk, Micron, Seagate, all up this morning nicely. And, we may see a little bit of follow through here. Obviously, after the last week's options expiration, which was a smaller one, it was a weekly one, there was a lot of options that expired on Friday in some of these names. So once that relief is gone, is passed away, well, we might have some upside here in some of these names. So obviously you see Micron, I'm showing it to you right here. It's up about 24, 25 bucks right now. Pushed through 1,000 earlier this morning before the market came down a little bit. So earnings this week, not a whole heck of a lot on the docket here, but there are some big names coming out in retail. We have Walmart coming out Thursday morning. We have Target coming out earlier in the week than that. And we have Lowe's, Home Depot, Estee Lauder. I see Ross Stores is also on the list, Advanced Auto Parts. And Analog Devices is one that I'm taking a look at. ADI is the symbol there. Bill Holdings, BILL is the name that I'm going to take a look at. They're kind of in that buy now, pay later group with Klarna and Affirm. The chart's looking much better. And I'm also taking a look at Baidu, maybe for a put play. Alibaba comes out with earnings later on this week as well too. They had some good positive news. I don't think the chart looks good. The earnings, expected earnings, is supposed to be minus 28% on this one. So I'm not feeling weak. They'll be reporting their earnings on the 20th. That's Thursday morning before the open, I believe. So that'll be an interesting one to take a look at, especially since Caterpillar had been pretty strong leading up to their earnings in July. So let's take a look at a couple of charts here for you. I wanted to show you the VIX, Volatility Index. Take a look at that. We are at the lows of the year, right? We're below 14.5. The lows of the year were about 14 and 14.35 roughly. So we are below that level. So danger Will Robinson, right? It's been very, very low here for a considerable amount of time. We've been driving lower highs, lower lows. So the trend in VIX has been down, right? And when the trend of VIX is down, it means the trend of the markets are what? They're up. So, who's to argue with the trend of volatility, nor the trend of the market action, right? But you can't stay this low for all this long. Eventually, some people are going to come around and say, look, the market has been very complacent here, and we need to buy some protection. And protection right now is rather cheap. We have realized volatility has come down quite significantly towards the implied volatility. It was much higher than that. Now it's become lower than implied volatility. It's about 12% right now. So options are cheap on the put side and the call side right now. But you have to think that if you're going to buy cheap call options, that you're buying into the fact that the market's going to keep going up every single day forever, right? I'm being sarcastic, of course, but that's the theory. That's the thought, that you think that markets aren't going to go down. You're going to buy some cheap options, that you're going to get several strings of days in a row that are up. It just doesn't really make a lot of sense right here to think that way, right? If you're going to do that, fine, buy some put protection as well too, because if we get a good whack in the markets, and we get a rise up in the volatility index to say 17 or 18 from here, that's a 30% move in volatility, right? So it's going to feel awful. The S&P 500 could drop 200 handles on that move just by itself, right? And the uptrend would still be intact. A, B, the volatility index would tell you, look, we're just getting back to some normal ranges right here, and we built some premium in. Now, what could cause the volatility index to go up? It could be anything. It could be any particular negative news in politics, and any macro news. So we really don't know, but it's always good to have some protection in your pocket, just in case something happens like that. And of course, if we don't even have that, we just have an overbought market and people want to take some profits, then it's going to hit. It may not hit the markets as hard as, a 200 handle move, but maybe an 80 or 100 handle move. It's going to feel awful on the S&P 500, but it's simply just profit taking as well too. So those things snowball very, very quickly. The ball gets rolling down the hill very, very fast, and you can't really catch up to it. So this is a good time to add some protection if you don't already have it, or at the very least, raise some cash and sell some positions. So I want to show you also another chart, IGV, which is one I've profiled recently on the Street Pro portfolio. IGV is the expanded tech software sector ETF. It had a really good run here over the past 3 weeks, from about the 87, 88 level up to about 106, so almost a 20% gain in about 3 weeks. Pretty good move up here. I think if it pulls back a little bit to say the 100 to 102 level, be good. It'd be a good one to take a look at. There's been some definite improvement in some of the names that are in this ETF, like Microsoft, of course, big one, Oracle, and we've seen some good gains in ServiceNow, Salesforce, CRM, and also Workday, which was the subject of a rumor buyout last week from Silver Lake Partners. So, and there's a whole bunch of other software names in this group. Datadog is one of them as well too. So a lot of improvement in some of the names in this ETF. If we do pull back a little bit, it means that we could get what's known as a cup and handle pattern, which is a bullish pattern where you get a bowl-shaped pattern and a bit of a pullback. It kind of looks like a coffee cup. Here you go, coffee cup like that, right? So it looks like it's a cup and handle. So it goes up like this, it comes back down, and then we pull right back up again. So you want to be looking for that handle to start adding to your positions and adding to this thing. So we're way ahead of it right now, right? It's not happening yet. If it comes down about 2, 3, 7 days in a row that we pull back down on this ETF, it's going to be a good spot to take a look at, right? So, and then you obviously, if we don't get that breakout through that handle, then you get stopped out. You're out. So the pattern didn't work. So that's the IGV. I also wanted to take a look at bonds here. I'm a little bit concerned on this one here. This is what we call the 210 spread, the 2-year versus the 10-year spread. It's the yield curve. And it's been rising, right? And when it's coming down, it's generally poor for the markets and poor for the economy. When it's rising up, it means that one of maybe two things, or if not both things, are happening. We're seeing could be a good rise in inflation. Obviously, the numbers last week didn't prove that. And secondly, we could have a big rise in the economy, right? So nothing really feeds the economy any better than rising prices, especially if they can pass those through to customers and pass those through to the consumer, right? So we're seeing a rise in the 210. Now, what is causing the rise in the 210? It is mostly a move up in the 10-year yield versus the 2-year yield, right? So that number is getting stronger as the 10-year yield goes up. We're at 4.7%, 4.1 or so on the 2-year. And as that continues to expand, I think people are going to get a little bit nervous and a little bit worried that the Fed may step in there just as a preliminary a cause to try and arrest some of that inflation, or maybe even arrest some of the growth. I saw the Atlanta GDP now is saying that this quarter is coming in at about 5.8%. Now we're about halfway through the third quarter over here, right? We have another 6.5 weeks stuff to go before the end of the quarter, before September 30th. So lots of work left to do, lots of business left to go. But that's a high number, right? I think we're somewhere between, probably going to be landing somewhere between 2.8% and that 5.8%. So we could be coming down, especially if the job numbers comes out in September for the August numbers, a little bit weaker than expected. I think that number will come down a bit, and so we lots of information left to go. So I will tell you this: last 2 weeks of August here could be pretty treacherous. Next Friday is the last trading day of August, and we will have some erratic price moves over the next couple of weeks. I think a lot of people on vacation, a lot of traders have stepped away here the last couple of weeks, and we're going to see some erratic price moves. So you got to be ready for that, and especially with low volatility right now. I think there's some market makers out there that are trying to work hard to try and make some money over the next couple of weeks, and they're going to move prices in a very wide range because they can do it, and there's not a lot of harm in getting that done. In other words, they're not going to get squashed by moving prices in a large way, left or right, up or down, because there's just not a market for them to get hit. So just be aware of that, and it's going to be a choppy couple of weeks. Take some profits when you have them. Raise some cash and sit on the sidelines. It's okay. Sit on sidelines for a little bit. I think market's going to open up a lot after the Labor Day holiday, and we'll see a lot more activity coming in. So that's it, everyone. Have a wonderful day. Appreciate all you spending a little bit of time with me today. Oh, quick reminder, also that we have a webinar coming up on Wednesday. I hope all of you got a chance to come to the webinar here. I'm being joined by Jared Dillian on Wednesday, the 19th, after the close. Jared's written a lot of books, and he's going to talk a little bit about his experience on Wall Street. And he's a lot of very, very interesting guy. He writes a newsletter called the Daily Dirt Nap. I read this from time to time. It's a great little piece of information about markets. He's there to help. He's there to help people become better traders and help protect them from losing a lot of money. He's a guy who I appreciate him spending a lot of time doing that with everybody every single day. So I think you'll find a lot of a fascinating interview with him. And then just a reminder, come to the website with a lot of free sources over here. I've talked about this quite a bit. Chart of the week it is out on Wednesday. The Daily Bites, which you're listening to today, Monday, and Thursday. These are free educational webinars. Options Insights blog, which comes out every Monday. You'll have that a little bit later on today. I've been doing that for 15 years. So there's a lot of material there. 2 trading tutorials we have. We have some online mini courses as well too. So come to explosiveoptions.net. If you don't have a subscription, that's okay. Come to it. Come to the website, and you'll get a lot of free resources here for learning about options trading and about the economy and about technical analysis and everything like that. So hopefully you get a chance to do that. So I appreciate everyone again spending a little time with me today. Have a wonderful day. Trade well. I'll see you guys all back on Thursday morning, and let's listen to a little bit more of the Moody Blues. Thanks, everyone. Make a promise, take